Welcome back to Morning Trade Live. Let's keep getting ready for earnings. Talk some tech. Microsoft and AMD, key players, hardware and software, both sides of the AI revolution. Angelo Zino's with us from CFRA Research, and Tom White's here in studio. Angelo, great to have you here. So did I get that right? Is that a fair way to describe it? The hardware and then the software. We've been really focused on the hardware for all the chip build out, but I'm kind of more interested in the software at this point. What are you excited about?
Yeah, I think you're absolutely right to be thinking on the software side of things a little bit more. And the reason I say that is because, we know in the early days, it is all about that infrastructure build and kind of those chip guys will continue to kind of get those orders. But in order for kind of AI, the whole AI theme to be sustained, you really do need to start seeing some monetization of AI, right? And in order to see that monetization of AI, it has to come on the software side of things. So Microsoft, probably the most important one of all the names this earnings season, because we do want to see what they have to say as far as Office 365 Copilot is concerned here from the initial ramp in November. So we kind of want to see what the momentum looks like there. And then, of course, on the cloud side of things, right, the cloud growth was about 29% in the September quarter for Microsoft. It is expected to decelerate to about 27 to 28% here in the December quarter, but still very strong numbers. But what we want to see is greater contribution of AI workloads on the cloud side of things. It was about 3 percentage points to growth in the September quarter. We want to see that number increase to at least 4 to 5 percentage points here in this December quarter, and see that momentum continue on the AI side of things.
Okay, so for Microsoft and the Assistant and the direct AI products, what type of transparency do you think we're going to get on that? What type of figures?
It's tough to say. I mean, the numbers are going to come out. You're not going to see it in terms of kind of on the actual results. So you're going to have to wait for the Q&A. The call's at 5:30. So it'll be interesting to kind of see what type of guidance they throw out there in terms of some of the AI type of figures, especially on Copilot side of things. I don't think they're going to throw much numbers out there. I think hearing the commentary will be important. Maybe they'll throw something out along the lines of what type of number they expect in terms of AI totality to come from here over in calendar 2024 or something along those lines. I don't think they break it down, let's say by specific area within their organization though.
Okay, so not quite yet, even though we know they're going to get peppered with questions on it. Hopefully they'll give us some details. So valuation-wise, Microsoft, how does that look? I think about kind of NVIDIA, where we had this big run-up, and then the valuation actually didn't go up because their earnings were so magnificent. They're kind of alone in that situation, right? I mean, Microsoft has seen significant valuation increase.
They have, and warranted in our view. When we think about Microsoft, this is a company we think on a forward basis should be trading about 30 to 35 times on a calendar 25 basis. That's our view. Big reason for it is because they've probably got the most kind of reliable, recurring type of revenue stream that's out there. So even kind of during uncertain macro times, that is a company that will continue to push through. Not to mention the AI story from Microsoft continues to be extremely bullish. So when we think about Microsoft and the valuation, it's kind of right where we think it needs to be. Going forward at this point in time, it is going to be more dependent on kind of the EPS trajectory and then kind of being able to see improving earnings trajectory here over the next couple of years. And we think that's gonna take place. 2024 is a big investment year, make no doubt about that. So the top line is going to grow faster than the earnings in calendar 2024. But long term, over time, very bullish on the earnings trajectory.
Okay. Let's talk about the options, Tom. Looking at Microsoft going into the report, any obvious bias in options market, any skew, any pricing that looks interesting?
Well, stock's overbought on a technical level. You could say that as it's hitting all-time highs. The option market's pricing in about a plus or minus 4.5 to 5% move in the shares, so not outsized. Implied volatility levels have come down as the stock's moved higher, but expectations pretty high in this one. So kind of want to look at a strategy where if you want to take that directional bias, you can offset some of your costs on it, maybe give yourself a little bit more duration and not make it a pure earnings play.
Okay.
So I went out to the February monthly cycle. So you're giving yourself 2.5 weeks till expiration. And that gives you a little bit more duration in case the stock does pull back. we'll probably see some commentary out of the analysts after that, no matter what happens. But going out to the February monthly cycle, I'm going to buy an unbalanced or skewed call butterfly to the upside. I'm going to buy one of the 410 strike calls, sell two of the 430 strike calls, and then buy one of the 435 strike calls. So you're buying a bullish $20 wide call vertical, selling about a $5 wide call vertical to offset some of the costs.
Okay.
If you were to just buy that vertical, the 410, 430, that's going to cost you $7.80, maybe up to $8. This one will cost you about $6.50 because you skewed it and made it an unbalanced call butterfly. Pay $6.50 debit. That takes your break even to $416.50 over the next 17 days. That's less than 1.5% above the current share price. So you don't need that outsized move. And because you made it unbalanced, you've only got one break even at $416.50. And even above that 435 strike, it's going to be more than a double in profitability on this. So just offsetting some of the costs. It's still a bullish trade, but it doesn't have to be uber bullish. You get that little kicker right at that short 430 strike where you sold two options on also, if it does go up there. But yeah, surprisingly, on a high price stock, we're not seeing outsized moves of 5 or 6% that the option market's pricing in.
Kind of a muted move, almost to some degree. But look, it's been kind of steady as it goes. Not a lot of gappiness in the chart. We had a few around the last couple earnings.
Yeah.
It does pick up a little bit, so I'm a little surprised you're only looking at like 4% expected move. But Angelo, your price target for Microsoft $420, right? So that's not too far away here.
Yeah, you're absolutely right. It's $420. It is a strong buy recommendation, though. Again, this is a name that's going to probably be, it's a name that we would tell investors to be buying back, to be investing heavily on those pullbacks because it has had quite a run here going into the numbers.
Okay, got it. Let's talk some advanced micro. How does AMD's earnings to valuation trade-off look like compared to NVIDIA?
Yeah, I mean, this is a name that's had an absolute run, right? I mean, you're talking about a name that's up north of 80% since they reported their September quarter results back in late October. And listen, I think it's one of those names where the earnings estimates have not gone up significantly for the street. You're looking at a PE probably close to about 30 times on a 2025 basis. If you think they can kind of get in that $5 to $6 range at the high end of that range at $6, closer to 30 times on a 25 basis. Whereas NVIDIA is actually trading cheaper. It's closer to 25 times or so our 25 estimates. So the big reason for that is because AMD is just now getting into the AI side of things in terms of their GPU ramp. On the data center side of things. I think that's all you really need to care about in terms of the results here for the quarter. They'll beat the Q4 numbers, we think. In terms of the guidance here for Q1, their big brother in terms of Intel reported last week. They disappointed. So you may see some greater than expected seasonality. But what's most important is the $2 billion figure that they provided in late October for GPU revenue in 2024. We've seen some on the street go as ambitious as kind of 8 to 10 billion on the high end in terms of expectations in 2024. They probably need to update that number to at least 4 to 5 billion here, given the run that we've seen here over the last couple of weeks. Not to mention Lisa Su in early December was very, very bullish at an AI day that they provided. So they kind of need to back that up with a higher number here relative to the 2 billion they provided earlier.
Seems like they've got a lot to prove at an almost 70 trailing PE because you're expecting them to say that their fiscal 23 full year ended up down about 4% in revenues, but is going to swing to a 20% plus advance in 24. That's a big swing that the market needs. And then also you expect margins to pick up too. So you're looking for basically everything, every metric to improve.
And that typically happens off of bottoms, right?
Sure.
Semiconductor bottoms, you see that volatility coming off kind of the first year out. I mean, you typically get easily 15, 20% type growth rates off those bottoms. So it's not far-fetched to kind of see that expectation thrown out there. But that said, again, I mean, this is going to be, when you kind of look at the multiple expansion we see here, it largely has to be dictated on what they say specifically on the AI side of things as far as data centers are concerned. Not to mention, I mean, Intel is not yet seeing any type of server build out yet after kind of coming off those bottoms last year. We think it has more to do with the fact that AMD does have the right capabilities and product offerings out there, similar to what you're seeing on NVIDIA's side of things. So if they can start taking some additional share on the data center side of things, I think that multiple is warranted.
Okay. Thank you, Angelo. Great stuff, great details. Tom, let's get a trade. We got about 90 seconds. Hit me.
Yeah, big divergences in implied volatilities. Option markets pricing about a plus or minus 9% move in the shares, which you expect, right, after that parabolic move we've seen. So I looked at something a little bit more bearish, where I'm going to buy a lower implied volatility and sell a higher one. So going out to that same February monthly cycle, 17 days to expiration, I'm going to buy an at-the-money put, the 175 strike put. And then against it in the February 2nd weekly options that expire in just 3 days, I'm going to sell the 165 put. So I'm creating a bearish put diagonal here to the downside. I'm paying roughly about a 630 debit for that. That's going to be my risk on it. But my break even on it, Oliver, is going to be about 181.50 over the next 17 days. You're buying basically about a 70% implied volatility out in the February monthly options, selling about 126% on aggregate in the near-term options. So there's that divergence, which lowers the price. This is a $10 wide bearish put diagonal that I'm paying less than $10 for. I'm paying $630 on this one. You see there, the apex of profitability is at or near that 165 put, just about that one standard deviation that the option market's pricing in. And you get that opportunity to roll that short option as you get closer to expiration. So this is one of those where, hey, if it's going to go down, you don't expect it to go down much. We're probably going to see some revisions to those revenue numbers on their MI300 chip, but this is definitely a bearish take, but you're taking advantage of that divergences between the implied volatilities, which causes the price of this put diagonal to the downside to contract a little bit and be less than the width of the strikes. But bearish.
All right. Like it. A fade.
A little fade.
Yeah, a little, realization of some of the high bar here,
Yeah.
perhaps. All right, thanks, Tom. Thanks, Angelo. Zino.